Hi guys, welcome to Ultra Crypto. I am Alan Chang. Let's get started. Today we have a special guest, Jason Chen. Jason is like a very mature trader for trading experience of over 20 years. He used to work at CIMB and like all overseas around like Hong Kong and the States. So Jason, give us an introduction of yourself.
Hi everyone, I'm Jason. I probably have about 20 years of trading experience. Started out doing Asia converts, and that slowly migrated to index options and futures. And right now, primarily I'm doing crypto and futures on indices.
So Jason, before we get to the main topic, let's talk about like the whole market these days. It's like pretty crazy about the interest hike and the high inflation and everything is like going on. It's making the market really unstable. And you've been trading in the bonds and the security sectors, even futures. And most of the time, like during this like those recession and stuff, we normally switch our like asset like from stocks to bonds because bonds used to be more secured. But right now it's like acting like totally different. It's like bonds and stocks are all dropping at the same time, and even some commodities are dropping at the same time as well. So like what is your point of view like for this period of time?
Well, I mean, I think what we're seeing right now is actually unprecedented right now. I mean, if you look at the biggest market right now is probably the U.S. Treasuries. So literally within the last 5 trading days, the 10-year yield jumped 54 bips, which is literally it's unheard of. Like, you don't see move like this in the biggest market like that. I mean, 54 bit doesn't sound much, but it's actually quite a lot. It's quite huge, you know, for something that is as liquid as 10 years Treasury bonds. So basically, what's driving all this volatility is, you know, central banks globally are pulling their funding. Cheap funding are going away. So then, in turn, are getting every asset class is getting repriced, and that's why you've seen like these tremendous volatility in like U.S. Treasuries, corporate bonds, equities globally, and also crypto assets.
So obviously, like crypto assets is a sector that you've been investing in for a while, and obviously within this 20 years, you've been through like all these kind of crashes, no matter 2008 and 2015, 2011, 2001, and even like of course, obviously the latest COVID crash. It's like, what do you think about this, like the similarities that are happening during this kind of crashes?
Well, the similarity is, you know, when you have something like this, then your correlation on all your assets is going to 1. That means if you think your portfolio is diversified, whether you have bonds, equities, you know, FX, or even cryptocurrencies, when it's going down, everything's going down. So it's basically dragging everything down across all assets. And the main difference, I would say, that's different from previous crashes. Previous crash we had, the Fed was behind the market. You know, they did the quantitative easing in 2008. They did something similar during the COVID outbreak in 2020. And now everything's going down, but central bank is not behind anything. As a matter of fact, central bank is telling you that, you know, because inflation, they can't control it. So they might actually make the economy go into a recession. So that's the one difference this time.
So after you got into crypto, like I think you might realize like all of your 20-year period, everything you faced like happened in like 1 or 2 months. So what would you do differently like during this kind of market? Because obviously all the financial crisis happened because it never happened before. No one expected it to happen, or else we'll both be like really rich already, right?
Yeah.
So for now, like what will you do different to your portfolio, and how will you treat crypto asset? Let's say digital asset. How will you like add it into your portfolio, and how will you balance it?
Well, if you're trading digital assets right now, I think it's a great environment because you have, you know, like some of these moves you've seen, it's either up 10%, down 15%. So volatility is there. And if you're just trading it purely trading it, I think there's a lot of opportunity to make money. But if you're actually investing in it, you're losing money right now. There's no way around it. So you're just hoping, what I would suggest is, don't stake out too many tokens. Like, just keep maybe 2 or 3 names on your portfolio, and when it breaks to a certain level, you want to go in and try to buy some, average down your costs. That's for investing in cryptos right now. That's the only suggestion I have. I mean, because if you're investing, you're sitting on probably 50% losses already.
Obviously, yeah, that's some micro strategy right there, actually. Because like right now, it's like if you're like hodlers and stuff, everything you can do is like you're not gonna take a 70% loss. You have to choose to believe in this industry. And the thing is like, and right now, as obviously like what we observed is like altcoins, their performance like this years are crazy. It's like above like 85% drop from the highest point, like since like last November or December.
Yeah, so that's why I'm saying like, you don't want to get too diversified in this space right now. You probably just want to stick to 2 or 3 names. So like, for example, when I started, I got involved in Chainlink, Solana, Cardano, even Polygon, and Ethereum. But right now, I'm basically just holding on to Bitcoin and Ethereum. Like, I essentially cut all the long position on all these altcoins and just sticking to these 2 names.
Well, don't forget to mention about your Luna. Well, you're actually pretty lucky because you actually got out of it.
I got out. Okay.
Yeah, but you didn't tell me about it, so obviously. But I believe like most of the investors, like after suffering through the Luna incidents, like it actually like put us into a bear market officially. So this kind of situation like happens, like I think all of those financial crises happen due to liquidity, like some liquidity issue. Like how do you think like how can we value like these companies to make sure like this kind of situation doesn't happen again instead of stable coins?
Well, I think you have to do your own research, right? Like some of these tokens, they're offering high APYs. If you think about it, how are they able to give investors these high APYs? So you have to sort of get to understand how the company is able to offer that kind of rate to people staking their coins to their platform.
Well, that's leverage. That's leverage.
I don't want to call them Ponzi scheme, but you should definitely do your research. If some company or some token is offering you like 10-20% APYs, you should really like think about how is it able to do it.
Especially recently, USDD is offering 30% APY.
There you go.
and is actually like saying it's basically risk-free. And the funny thing is like their collateral base is like over 300%, but it's like calculated by like Bitcoin, TRX, and all those. So it's like
right. I mean, so everything is relative, right? So if you're looking at the 10-year Treasury, that's yielding about 3.5% right now. So what that means is you hold 10-year Treasury for 10 years. Every year you're going to get 3.5% for the next 10 years, right? And if you obviously digital asset is more speculative, it's more risky, so you should get a risk premium above the 10-year yield. But what is the right risk premium? Is it 2 times, 3 times? It's definitely not 10 times, right? So you sort of have to compare that relatively speaking. Some tokens giving you like 40%, like Luna is offering you 20%, which if USD is supposed to be like a stable coin, like how are they able to offer you 20%? I mean, obviously, hindsight, I'm able to say this, but during that time,
you're like 20% APY.
20% was enticing, but I did not get involved in it, so lucky for me.
Yeah.
But yeah, you should think about it in terms of relativity. Like, something risk-free is 3.5% right now. What is the right risk premium you should get for whatever asset? It could be something else. It could be equities as well.
So before we end this interview, like Jason, what do you have like any recommendations for newbies or professional investors to get in cryptocurrencies?
I think if you're just getting involved in cryptos right now, two things. One, don't use leverage, and I'm saying that's probably my number one rule because very volatile right now. If you're in the wrong side using leverage, you could be wiped out completely. I mean, some of these altcoins are going up. Polygon today is up 25%. So, please don't use leverage. And second of all, respect your stop loss. Please, if you're long, if you're short, it doesn't matter. Respect the stop loss. Those would be the only two rules I recommend.
Especially that is really not that easy in the crypto sector, actually.
Yeah.
Because, it's like so different when you're trading in cryptos, no matter by technical analysis or by fundamentals. It's like you really have to have a really strong like discipline and feeling to keep these things going. And actually, like, for right now, like, your portfolio, like, for digital asset, are you gonna increase the amount, or are you gonna buy more when it hits lower, or are you gonna just remain the same on a risk-off market?
No, I'm actually, there are levels that I'm looking at. So, like, Ether, if it dipped below 900, I will start accumulate again. Bitcoin, I think last week the low was around 18,000. So I was looking at 16,000 initially as the first level to try to average down some of the costs. So I guess 16,000 for Bitcoin and 900 for Ether. I will go and slowly accumulate.
All right, so take some note. 900 for Ether, 16,000 for Bitcoin. All right. Well, first of all, thank you, Jason, for your time today, and thank you all for watching Watch Out Crypto. If you want to see Jason again, please leave a comment below, and I'll try to find him and let him go and give everyone some more lessons on tradings. Well, thank you all for watching Watch Out Crypto. I am Alan Chang. I'll see you next time. Bye.